Lyfts blockbuster IPO is bad news for San Francisco home buyers. Ride-sharing service Lyfts' initial public offering has attracted high demand. And experts say, Lyfta, and shares of the company were up as much as 22% in morning trading. The first trade was, and if is any indication, other tech companies' public offerings this year could be a boon for investors, but a curse for home buyers. Lyft is for residents of the San Francisco Bay Area and its surrounding communities already swimming in money from Silicon Valley millionaires. These IPOs could make it even more difficult to find a home at an affordable price, especially if these companies' employees are among their neighbors, according to a recent report by real estate website Zillow's EG. Also see. Zillow examined the link between Facebook's IPO FB in 2012 and rising home prices across the Bay Area and found that home values rose more quickly in neighborhoods with higher concentrations of Facebook employees after the social network became a publicly traded company. Specifically, every 10 Facebook employees living in a given U.S. Census tract at the time of the IPO were associated with an extra 1.6 percentage points increase in home values over the following year, the report said. Related video Lyft's 3 biggest post-IPO challenges provided by WSJ. The report comes as Bay Area tech leaders, including Facebook chief executive Mark Zuckerberg and other companies and philanthropists, have said they plan to address the housing crisis by raising $500 million to build 8,000 homes. That announcement, in dollar figures, the median value home in a neighborhood with a high concentration of Facebook workers rose by an extra $20,800 between May 2012 and May 2013. Zillow cautioned that, nevertheless, homeowners who live in areas with a higher concentration of workers from companies planning IPOs should expect to see those corporate actions affect their home values, said Zillow Director of Economic Research and Outreach Skyla Olson. And that could provide a boost to the region's housing market, which has cooled in recent months after years of skyrocketing prices, fueled by high demand. These housing market, in particular, employees of companies that go public may receive bigger paychecks following an IPO, or shares of the company they already owned could grow in value. Those extra funds could then make it easier for these workers to come off the sidelines and become first-time home buyers. In turn, the lessons learned from Facebook's IPO don't just apply in the San Francisco area. Olson said IPOs also aren't the only corporate action that can have an effect on home prices. Zillow that Apple's. This story was updated on March 29, 2019.
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that.